The markets are manipulated in whatever direction the manipulators think will be easy to move. I wouldn't confuse yourself in the silver market by thinking that there was a 4-decade-long conspiracy to depress the price of silver. They didn't have to do that because the market did it. The US dollar was strong. You don't need to work really hard to cause something to decline that's going to decline of its own volition. I believe in 2022 that whole circumstance changed. And I believe at some point in the future that the short-term manipulation that happens in precious metals markets will be from the long, not the short side.
The silver market has regained momentum, breaking back above the $30 level during the early hours on Thursday due to substantial buying pressure. This breakout occurred during the Asian session and has continued its upward trajectory, reflecting the aggressive buying behavior often seen in silver markets. Rick Rule from Sprott Incorporated highlights the distinct motivations between silver and gold buyers. Silver buyers are driven by quick profits and market trends, characterized as greedy buying. Gold buyers seek security and stability, viewing gold as a safe haven during uncertain times, known as fear buying. This divergence in motivations reflects different perceptions of these metals' roles and qualities in financial markets. As silver has seen extreme volatility in its price, many investors believe its price is being manipulated. Rick asserts that market manipulation is a common phenomenon across financial markets, exploiting differences between physical market conditions and highly leveraged futures markets. Historical events like the 1970s silver short squeeze orchestrated by Nelson Bunker Hunt and William Herbert Hunt illustrate this extreme volatility. Their significant purchases drove silver prices from $6 per ounce in 1979 to a peak of $50 per ounce by early 1980, triggering a short squeeze where traders betting against silver were forced to cover their positions at higher prices. Government intervention subsequently regulated silver futures trading to prevent such disruptions. Similar dynamics emerged during the 2008 financial crisis when silver experienced a notable short squeeze. As financial markets faltered, investors flocked to precious metals, pushing silver prices from around $10 per ounce in late 2008 to nearly $50 per ounce by April 2011. This surge was driven by short sellers rushing to cover their positions amid heightened market uncertainty. Rick suggests a potential shift in market manipulation strategies within precious metals markets. He indicates that manipulative activities could move from short positions, betting on price declines, to long positions, betting on price increases, depending on broader economic conditions and changes in global financial markets. We will present clips from Rick Rule's interview with Liberty and Finance. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
I think they're missing perhaps two things. First of all, the silver buyer is more a greed buyer, a momentum buyer, focused on unbridled upside. The gold buyer is a fear buyer, a very, very different buyer. The second thing I think that's probably enough, actually. The motivations for buying gold and buying silver are often very different. The other thing I would say is I'm not certain why the ratio between gold and silver has any validity as an investment consideration. The fact that silver is 16 times more prevalent in the Earth's surface doesn't go to very much to their relative utility. Both have some utility as a monetary metal, but gold would seem to have deeper utility as a monetary metal. Both have some utility in commercial applications, but silver would seem to have more in commercial applications. Further, with regards to silver, the speculator needs to understand that to understand the future supply of silver, since so much of it is produced as an adjunct of the production of, say, copper, lead, and zinc, that you have no idea what the supply is going to be like 5 years from now. It'll depend on copper production, lead production, or zinc production. So I think that the equation is much more nuanced than the questioner presented. Silver and gold manipulation. I remember back to the decade of the 70s, where trading desks manipulated the price of gold and silver up. Manipulation occurs in all markets, and the manipulators generally try to profit on the difference in scope and scale between the physical market and the futures market. The futures market being much larger, much more leveraged, and very prone to outsized moves as a consequence of moves in the physical market. Therefore, if you're trying to profit on a down move in silver, you would build a ladder in the silver futures markets and then use a physical position, probably borrowed, to sell overnight during the period of time when the market is the least liquid to generate the most downward momentum in silver in the short term so that you could cover your futures positions as they reacted to what happens in the futures market. That exact same strategy happened in the decade of the 70s from a long point of view. The markets are manipulated in whatever direction the manipulators think will be easy to move. I wouldn't confuse yourself in the silver market by thinking that there was a 4-decade-long conspiracy to depress the price of silver. They didn't have to do that because the market did it. The US dollar was strong. You don't need to work really hard to cause something to decline that's going to decline of its own volition. I believe in 2022 that whole circumstance changed. And I believe at some point in the future that the short-term manipulation that happens in precious metals markets will be from the long, not the short side. And I don't think that there is as much overt manipulation of the formal media as people think there is. I think that perceptions are forged in an odd alliance of big thinkers, the World Economic Forum and all that kind of stuff. And I don't think that the leaders of government have to influence the media people too much because I think they went to the same schools and they hold the same value. Now, there are periods of time where governments can show favorites to media, but I would suggest to you that the whole emergence of social media has meant that there are sources of information and opinion that are disintermediated, that are much, much, much more difficult to manipulate.
Gold's ascent towards $3,000 per ounce faced a recent setback when China's central bank paused its purchases. However, optimism remains high as other central banks are poised to increase their acquisitions. According to a recent survey by the World Gold Council, 81% of 70 central banks expect to ramp up their gold purchases, marking the highest anticipated level since the survey began 6 years ago. Central bank activities have played a pivotal role in driving gold prices up by 49% in just 20 months. Soaring from $1,631 per ounce in October 2022 to a record high of $2,427 per ounce last month. Rick Rule highlights that while foreign central bank purchases have supported the recent bull market in gold, the sharp increase in gold prices, both in non-US dollar terms and, more recently, in US dollars, has generated substantial momentum. This surge has elevated gold's appeal among institutional investors, who increasingly view precious metals like gold as essential hedges and stores of value in an uncertain economic environment characterized by shifting paradigms. Rick anticipates this trend will drive heightened institutional interest in gold and other precious metals, positioning them as stable investment options amid evolving financial challenges.
I actually think that's already underway. It is true that the current bull market in gold has largely been a function of foreign central bank buying. But I think the price escalation in non-US dollar terms, which has been extraordinary, and the more recent price escalation in US dollar terms has created the momentum that has established gold as at least a legitimate topic of discussion among institutions. It's important to note that institutions' perceptions, like the perceptions of individual investors, has been formed, at least recently, over the last 40 years, in a market that's probably the most benign financial market in recorded history. The period 1982, after the breaking of the inflation of the 1970s, to 2022, world peace, globalization, the hegemony of the US dollar, declining interest rates. I mean, a complete Goldilocks scenario. Nobody was afraid of anything. They didn't have any reason to be afraid of anything. Even in periodic moments of illiquidity, the 1987 debacle, the 2008 liquidity squeeze, the lesson that was learned was buy the dips. My suspicion is that epoch ended in 2022. Clearly, there is a hiatus in the process of world peace. Clearly, there's less globalization. Clearly, the demographics around the baby boomers coming of age is past us from an economic sense. And clearly, too, the period of declining interest rates is over. In addition to that, one thing that we don't notice is the fact that the growth of government, which we were able to afford over 40 years, is over. It doesn't mean the government won't keep growing, but our ability to afford it is coming to a screeching halt. So a combination of all those things, I think, will force institutions towards more precious metals ownership.
Market manipulation in the silver market could lead to far-reaching consequences. Artificially influencing silver prices distorts the supply-demand dynamics, potentially misleading investors and causing financial instability. Historical instances like the silver short squeezes of the 1970s and 2008 highlight how speculative trading can drive prices to unprecedented highs, triggering regulatory interventions to mitigate market disruptions. Such practices could result in severe ramifications for global financial systems. Share your thoughts on Rick's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.